start the recording. Yeah, so hey guys, this is Finance Meets Real Estate. We have a wonderful guest here today. It's Lance Peterson from Verivest. So Lance is, well, like I mentioned, the founder and managing partner of Verivest. So he's going to talk today about the due diligence process for a real estate syndication. So in particular, basically how both parties to a syndication are affected, like the limited partner as well as the general partner. So Lance will flip back and forth between how this process impacts both sides and, to avoid what he calls a Shakespearean tragedy. So Verivest is an end-to-end real estate investment platform designed to bring transparency to the middle market investing. Prior to Verivest, so Lance has over more than 13 years experience in middle market real estate space. He's also a principal of Fairway America and host of the Real Estate Risk Report podcast. So if you guys have any questions during the event, I would ask you to put them on the chat.
Yeah.
We'll relate at the end, and we can also open for more direct discussion at the end. We try to get get our guest go through his presentation first. So with that, I'm going to pass it on to Lance. Thank you so much.
Yeah, thanks, Stefan. Yeah, I had Stefan on the podcast, was it a couple weeks ago? So that episode should air here in a few weeks. So if you really want to nerd out, definitely check that out, because Stefan went deep on the data side, which was fascinating. So thanks for having me, man. I appreciate it. Yeah, so we're gonna talk about, I've titled this sort of sponsors are from Mars, investors are from Venus. As Stefan mentioned, I've been in the business a long time, and I've sort of sat in every chair that you can. And and really as a service provider, which is what we do, it's the Verivest, a service provider to the industry. And, we help the participants in a multitude of ways. But one of the things I've noticed over the years is that, much like in relationships, which I can, I'm married and I've got 5 kids, and I've had employees, and I realize, I'm good at some things, but, this whole relationship thing and communicating with humans generally isn't one of them. I think many people could probably relate with that. But one of the things I've noticed, right, is that much like my wife, when she shares her problems with me, I go into the fix it mode, like I think many men do. And of course, she just wanted me to listen to her, and it's taken me, I've been married, it'll be 20 years here in August. So, but it took me a long time to figure out that we're sort of wired differently, and that our needs are a bit different. I think it's the same in this, is that when you've got someone who's the limited partner, the individual investor, the passive investor, of course, when they're vetting a deal sponsor, someone who's got investment opportunity, there's two very different positions. And what I've noticed is that there's lots of misunderstandings, and I don't think each side fully appreciates where the other side's coming from. And since, I spend a lot of my time and doing a lot of consulting with deal sponsors on structuring, mainly pooled investment funds, I really have to talk through and realize just how naive they are, I think, sometimes to the issues. Right, that like investors won't like that, right? Like you're not going to raise money for that. That won't work. And having to sort of walk them through why, that would probably be a bad idea is just made me realize that it goes both ways. And a good example earlier this week is I was on the phone with a passive investor who's saying, I love what you do at Verivest, but you need to do this and this and this and this as well. And we really got to put the screws to these sponsors. And I'm like, like you can't have it all, right? Like it just doesn't work like that. So today we're going to spend some time talking about what I think the core of these issues are. And it's something that I've sort of called the dance, right? And it's this dance that we all play, is that, when you've got a project or a deal or a fund and you need to raise money for it, it's, especially if it's a syndication, right? There's time pressure. You've got earnest money that's probably gone hard, and you've got to climb this, you just aren't sure if there's enough depth, or your investors aren't, are they all on vacation? Are they going to be able to get that $2, $3, $4, $5, $10 million raised before the deadline? It's stressful. And anytime you're in that position, I think I call it pressing, right? You're going to start to press, and you're going to want to jump to the chase, and you're going to want to, hey, are you in or are you out? And you know, you need that money. And I think when I look at all the ways that the deal sponsor side of it kind of goes about trying to find more investors, you know, they'll try anything. And I think that pre-COVID, you saw people, they would fly halfway around the world to try to meet investors. And they'll spend all sorts of money trying all sorts of different crazy things. And you know what? We were in the same position. We spent thousands of dollars trying to find ways to develop more relationships at Fairway America over the years, and we realized that most of them are a complete waste of money, right? And they don't work, and you're just sort of chasing ghosts, so to speak, right? And so up on the screen, I kind of show all the different things we might do as deal sponsors to try to press the issue and make it happen. I think investors have a similar sort of dance that they do in search for finding, you know, people to invest with and deals to invest in, you know, asking buddies and, you know, Googling things and, you know, calling all these people and asking all these random questions. And, you know, and a lot of times they just use waiting, you know, they might meet somebody and they wait a year or 2 years or whatever, some time, random arbitrary time frame before they decide to do something. But either way, this sort of activities don't always benefit either party. And there's a lot of waste, right, that goes into it. So for me, you know, looking at it from, you know, what if we could build a more efficient way for this process to work, right? And I think from the deal sponsor standpoint, I've sort of, you know, narrowed it down to just a handful of things that I think that you really got to be focused on and that need to be in place in order to have a chance. And this is obviously an extensive or comprehensive, but I think first and foremost, right, these days, especially post-COVID, not that it really worked even pre-COVID, but just realizing, much like in the car sales, you know, these days you don't go to the car lot to sort of do your research on cars, right? Like that's just weird. That's how they used to do it. These days you basically know down to like the make, the model, the trim package. I mean, you know everything about it. When you show up on the lot, you're probably buying the car, right? And so these days, all that happens online is the research that goes into the deal sponsors and the opportunity. So ensuring that your online presence is really dialed in, I think, is paramount. And it amazes me that most people don't sort of think about that. And what I mean by that is like your website and your LinkedIn profiles and having consistency across your team, and, you know, just really making a concerted effort and making an investment on those things can go a long way. The second thing that I think a lot of people are missing is just a pitch deck. And by a pitch deck, I don't necessarily mean for a specific deal, but I just mean like, what's your story? You know, what is your narrative? What makes you different? What is your strategy? And putting that into a PDF form and spending some money on design and making it look well. This is who you are. If you're a deal sponsor, the reason why someone would invest with you is because they believe fundamentally that you have some way of, you know, access to deal flow that they don't, right? And you're executing some acquisition strategy and you have some sort of talent or the resources or whatever, the wherewithal to execute some business plan, right? So it's important for you to have that story down so that when someone asks you that, they feel like, oh my gosh, you've got this unique angle on how you do what you do. I also call it conviction, but it should be in some sort of deck that you can share with people, that you can get on a Zoom call like this or sit in a coffee shop and sort of walk them through, you know, what the method to your madness is, you know, how you do what you do and why you do what you do. I think the third thing is, you know, having a track record. The degree that you don't have a track record, it's obviously going to be an uphill battle, but everyone had to start someplace. But to the degree that you've actually done something, you've acquired real estate, you've made loans, you've done these things, it amazes me when I'm working with our new sponsor, members at Verivest, when you ask for, like, you know, it's easy for everyone to tell me how much we bought 400 single family homes and I've bought $500 million real estate. Like, it rolls right off their tongue. And then I say, oh, do you have like a spreadsheet? Like, do you have that someplace so I can see what you've done? And it's like, hang on a minute, you know, and it's sort of 3 weeks later, we've got nothing, right? So it's documenting what you've done is important. I mean, just getting it into a spreadsheet, address, acquisition amount, the date you did it, those sorts of things, it's worth your effort because someone is eventually going to ask you to sort of prove it, which we'll get into in a few minutes here. And I think the other thing too is building over time a due diligence questionnaire. So all these silly, crazy questions that investors ask you, you should actually start putting them in a document. It's called a DDQ. That's what, you know, institutional world, that's what they call it. It's, you take who we are, what we've done, what we're all about. All these things are sort of in a more comprehensive sort of document that you update over time that you can provide to investors. When they're, running through there, you save your time. It looks more professional. It's just a good idea. Investor references. That's another one that, I asked for, hey, do you got like 5 references? We've raised all this money. We've done all this great stuff. Oh, so can I get like 5 references? They don't have it. And it's something that, just giving them a list of here's 5 people that have invested with you, or it's 3 or whatever. And the other thing that amazes me when people give me references, I actually call them, and you'd assume that these are the 5 best investors that they've got, and they're going to give glowing reviews and references. In a shocking development, that's not always the case. They're basically like, these guys aren't very good at sending reporting, and they don't really say much, and they kind of went dark. And, it's like, this is the best reference they had, right? So you need to like have the list and then call these people and make sure that that they're going to give you enthusiastic, glowing review. Because when you think about it from a passive investor standpoint, they don't have that many tools in their tool belt. And now at Verivest, I'm going to show you some ways that we can help them so that they can, I think, check more of those boxes more efficiently. But really, talking to other investors is a big one that many of them sort of a go-to sort of tactic for their DD. And then I think taking all this sort of data and having a secure data room. It's a fancy way of saying, put it in a Dropbox folder, right? So when someone says they want it, the funny thing that happens just by giving them a link to all your stuff, most of them will open it up and realize there's a bunch of data here, and they're not going to look at it. For the guys that are more sophisticated, they're going to be really impressed, right? And yeah, they might ask you some more questions and all those things, but it really is, these are the things that you put in place. This is how you survive due diligence, right? And waiting to do these things is just, you're not helping yourself out if you want to raise, a good amount of capital. And I think that here's a quote from, one of the leaders of one of the larger accredited investor groups, right? And these are the things they put on their blog, but you can see kind of their sentiment is that, he's imploring investors to, hey, you need to verify the background and track record. Easier said than done. Make fewer bets, larger bets on established sponsors. That's the trend. That's code for good luck if you've got a limited track record, right? It's only the big boys. And I see this every day that investors, of course, because they have no other way, they look for signal, social proof, right? Who's everybody else investing with? That's where they're going to put their money. Now, ask Bernie Madoff's investors how that worked out for them. I'm not saying that all the big boys are bad. It's just to say that this sort of shows you there's a bigger problem. And once again, being an entrepreneur, it's one that I'm trying to help, solve. From an investor perspective, I think that you look at your process, you need to say, well, what is your mandate? Like, what is it that you're looking for? You can't just go and start every random, email you get from some multifamily sponsor. You have to have your own criteria, right? You have to develop your own conviction about what you're looking to do. Do your research, do your homework on sponsors. Don't just fall for the pretty pictures in the OM. Like, ooh, that's a really nice shiny pool. I'm going to throw 50 grand in that deal because everyone else is investing with that sponsor. That's just a bad strategy. You're going to eventually lose money doing that. And then I think actually let the sponsors know that you exist. This is another mistake I see many of them make. And we've seen it even more so with the launch of our directory. Investors will call me and they'll be asking all these really good questions about certain, it just happened today. In fact, I got an email from somebody and they know all this stuff about sponsors. And then I say, I'm assuming they talked to them. And I'm like, well, did you ask them about this? And their response is, oh, I haven't talked to them yet. I'm like, what? You haven't talked to them yet? How do you know all this stuff about them? Oh, I found some other back channel and some whatever. So it's like, if they don't know you exist, then, you might not know that there's certain deals that never see the light of day. It's just, you need to reach out and let them know that you're there and you have some interest. And then I think, actually validating the track record. So when I've trained myself, when I hear sponsors talk, is that I always jot down the claims they make, right? It's $500 million of real estate, 400 things, 57 years of real estate experience, whatever, right? We all do it. We've got to sort of throw out those vanity metrics. I think that this is my big bugaboo, right? Is that it's easy, talk is cheap. It's easy to say those things out loud, but what you don't realize is that you're more than likely in the process of trying to sell someone securities. And if you're exaggerating your claims, which of course we've seen is more pervasive than I even thought it would be, it's really, really dangerous because it's called misrepresentation. And if the deal goes sideways and you put in writing or somehow, some way, the SEC gets a hold of that says that you told someone you bought $500 million worth of real estate when in fact you've only bought 50 million, or even whatever the number is that's misrepresentation, and bad things can happen to you. It's going to cost you a lot of money, a lot of time, and you're going to lose your reputation. So from an investor's perspective, when they say those things, put their feet to the fire, prove it, right? Like this whole idle chatter, it's like, show me the proof that you've done that. And obviously I'll show you some ways that we do and make that easier for people. And then I think actually do the reference checks, right? Actually call the names on those lists that you asked for. And then background checks are a good idea because they reveal, civil litigations and lawsuits and things that have happened. Those are called red flags. And those are ways that you can sort of avoid a lot of financial pain by just seeing what people are all about. And then actually complete and separate the investment due diligence process. You got sponsor due diligence, which is a lot of most of what I've covered so far. And then you can evaluate whether or not this investment fits your criteria. And then in a perfect situation, then and only then would you make an investment, right? But this is, maybe you don't follow this process exactly, but it should look something like this. You need to have an investment process. You expect that from all the sponsors that you'd be investing with, right? There's got to be a method to their madness. What's your underwriting criteria? What's your process? What's your acquisition strategy? You should have the same thing, even if you're a passive investor. So the thing I've realized in doing all this is that it's not about the parting or the wiring of the money. That's not really the transaction. The transaction is the trust. The trust is the transaction. When the investor decides that they trust the deal sponsor, that's when the transaction's been consummated. And if you as a deal sponsor realize that that's really what that's your touchdown, that's what you should be focused on. How do I build trust and get them to the point where they go, you know what? I like these guys. I like what they're saying. I verified their claims. I feel comfortable with them. I trust them with my money. That's what you should be shooting for. And I know that this whole trust thing is fleeting. You can lose it in a second, all those things. But when you sort of change the way that you look at it, I think that it helps kind of frame a better way to go about it, because that pressing that you do goes away. Because what I hear a lot of guys do is they just start to pitch right away, right? The first thing they do is like, we're doing it. We got a 10 pref and a 60, an 80-20 split, and this deal's freaking amazing. It's like, what? I don't get it. Like, who cares? Like, what do you guys do again? Like, let's start there, right? Like it has no context to it. So just pitching someone on some investment straight away is just, I don't know. I've got some crude analogies that I could throw out there. I'm going to hold them off for today, but anyway, so once again, investors, they don't know who to trust, right? Like this guy was like running NASDAQ or something, and he just defrauded, billions of dollars. It's not good. So, and it's not that, deal sponsors aren't trustworthy, right? It's just that the trust between two parties, in this case, the deal sponsor and the investors, it takes time, right? I mean, it takes time to build trust with people. Those are relationships. There is no shortcut to that. And then ultimately, this is what we kind of all face here, is that the beauty of the private markets and real estate in particular is that it's inefficient, right? It's not liquid. It's not trade. It doesn't trade. And as Stefan and I, another plug for our podcast, right? I mean, like, that's what it's all about. That's what he looks for. It's all about trying to find the inefficiency. There's something's mispriced. That's the beauty of it. The problem with the stock market these days is that it's, by and large, it's perfectly efficient. I mean, this is another debate we could have, but I mean, it's far, far, far more efficient. The price that it's a lot closer to what the value is than this stuff. And but it also means it's opaque. We don't know what we have. And that's part of what makes it, that's how we can generate, outsized returns at times. So for me, I think when you look at everything that's occurred in the last handful of years, I mean, with all these like election frauds and scams and, and I'm sure maybe it's always been like this to some degree, but I'm telling you guys, and you can agree or not, but I don't know who the hell to trust anymore. Like I can't even turn on the news. I don't even watch news anymore. Because as far as I'm concerned, someone's just spinning something and probably lying to me. And I think that I'm not the only skeptic that's out there. I think all of us are sort of like, I really don't know what I thought was real. Or I even found a baseball the other day. It's like these guys the pitchers are doctoring the baseballs. And, it's like, I don't know, like everyone's trying to find an edge. And it seems like everyone's looking to get ahead and it involves some form of cheating. So the demand for sort of transparency is upon us. And I think that's what you see, is that everyone's saying enough is enough, right? We need transparency. And of course, in the media, you see it all the time. There's articles all over the place where it's just, investors urging, the private equity industry to improve their transparency. And, and it's just saying like, stop hiding things from us, right? We want to know what we're getting into. And so for me, all of these things sort of coalesce as I'm watching the inefficiency of the markets and not enough capital flowing to those who are worthy stewards of the capital. And it just really comes down to, what if there was a shortcut to this trust? And for me, this is sort of that new game that I think that we're playing and we're trying to put forth, right? And that's having a place where you can research sponsors, right? We do that at Verivest now. Having background checks annually on principals, right? Being committed to that, having track records being verified independently, having someone provide oversight and monitoring of these investment vehicles, whether they're syndications or funds or whatever. I mean, where's all the money going? Is the money going where it should be going? Are the fees being calculated properly? Quarterly reporting, right? Like that shouldn't be sort of like a differentiator. It should be a requirement, right? Like not providing financial statements to your investors on at least a quarterly basis just seems ridiculous to me. Like it just doesn't make any sense. And then having some higher standard, right? Because once again, if we don't regulate our own industry, they're going to the regulation will come, right? And you already see it. People always take things and run with the rope they're given, right? And then that's what causes more regulation. So we're better off self-regulating. And I'm passionate about that. And so I think, looking at it more like, what does transparent real estate investing look like? And you think about what happened, in Craigslist. It was obviously Craigslist was awesome, right? But it's a freaking scary place, man. Like there's all sorts of weird stuff and sketchy stuff going on. And you never really know if you're going to get shivved if you go and try to buy this MacBook, or you're going to get some like generic. I mean, you have no idea what you're going to get, right? So would I rather pay like $449 for this one on eBay from some dude who's like sold stuff 2,204 times positively, or go down to some random coffee shop, right, in downtown Portland and pay $1 more, right? Like I'll buy it on eBay, thanks. And that's kind of how I see it, like creating that a different way of doing it. Right now, I feel like it's more of the industry's a bit more like Craigslist than it is like eBay. So for investors, I think that having this additional verification and transparency means they can, confidently invest and freely invest in these things without the fear. Because this is part of that thing that I don't think deal sponsors fully appreciate, that most limited partners investors are freaking terrified, and they lose sleep at night that they've invested in a Ponzi scheme or they're going to be ripped off. I know it's irrational and sounds just crazy, but it's true. And if they're thinking it, perception is reality. For sponsors, I mean, having investors find you instead of you chasing after them seems like a way better idea. And then having the conversations actually centered on the deal rather than whether or not you're credible. Because I think that's the other thing. It's just so much time wasted with investors trying to like end around, figure out whether you're trustworthy or a crook, when it'd be easier just to say, dude, we passed background checks, our track record's legit. Someone's going to monitor the deal. Do you like the deal or not? Right? Does the business plan make sense? Can we talk about the deal? Are we going to talk about all these other random questions you have? And also ultimately just, allowing you to build your investor base faster so you can do bigger deals. Because I think that's for a lot of guys ends up being, you hit a ceiling with the relationships you have, and you can't, you can only do $4 million equity raises. You can't take down that 10 million. I mean, I just talked to a group earlier today that's been in business for a long time. And even they're saying that, like, man, we've got this $18 million multifamily deal that we want to, raise, we've got to do. And they're like, that's even a bit much for us, right? And like, it makes them nervous. And it's because their base of investors is only so deep. So for me, looking at both sides, I mean, I'm trying to figure out how we can create solutions where deal sponsors can spend the vast majority of their time working on deals, because that's what you're good at, right? And that's what you want to be doing. Instead of this, you're chasing after investors, spending all this time and money, doing all this administrative bullshit that's just a waste of time, right? Which of course is our business. We do administrative bullshit. But anyway, that's fine. We'll take it off your plate. You can do more of that stuff. But I think, the issue with a lot of this stuff is just that it can really only happen when you've got some sort of neutral, there's got to be some neutrality built into this, right? And I think that's usually the problem. Like you look at, and not to like demean like the real estate crowdfunding sites, I call it real estate crowdfunding kind of V 1.0, right? Is that at the end of the day, yeah, great, you put deals up on your site, but at the end of the day, you're being compensated. I mean, you make money if people invest in them. That's not really neutral, right? It's sort of like they've picked a side. They want you to invest in that deal. So for us, looking at it, like we need sort of a neutral, independent party. And I think for us, that's what we looked at and said, we need to create something different. And so we've created what we call the Verivest Sponsor Network. And I can see a guy on here, Andrew with Romano is up on the video screen. He is a member of the Verivest Sponsor Network. Thank you, Andrew. But this is what it's all about, right? Is building a group of people and sponsors who believe in the things I just said, right? Who are willing to commit themselves to these higher ideals. That's what we're doing. And I think that this is how we avoid the Shakespearean tragedy, right? That takes place. And this is how we get more capital to kind of flow in. Well, how do we do that? Right? For us, we've basically said, we can do background checks, right? We can run background checks on principals and, no business bankruptcies, no regulatory sanctions, no felony criminal convictions, right? The bar is not that high, right? You pass this bar. We know that you've kept your nose clean, and we've created sort of, you do that, you become verified. So at least you can tell people we're not crooks, right? And then we've created a higher standard, which we call verified gold, which I'll get into in a minute. But really for us, then it's allows to take what we were going through earlier and streamline this from the investor's perspective, right? They figure out what they want to invest in. They research the sponsors on verivest.com. We validate the track record, right? And I guess I'll get there in a minute. But this is what it looks like, right? That directory. And then we come through, you provide us with that spreadsheet, you pay us a fee, we validate the track record, we populate it into the system. So now prospective investors can come in and see those assets you've acquired, right? They can see the returns. We can validate the IRRs and the equity multiples, right? We're independent. So we're going to say, show us your stuff, prove it to us. And now you've got your sort of living track record, right? Up on your profile. So now it's like, hey, we bought $500 million worth of real estate. It's like, don't take my word for it. Go to our Verivest profile, right? Here's the address. This is what these guys do. And then you've got sort of those reference checks and background checks, like we take care of the background checks. And now you can go in here and see these background checks. Oh, they've got, they got sued by some borrower, some tenant, things happen. But, they can see those things and they know kind of what they're getting into. And I think that removes a lot of that friction, shortcuts that time to trust. And then ultimately, this is what I'm hoping is that it does then allow them to sort of narrow in and focus their time on whether or not that investment and that risk in that investment fits what they're after, right? Because, and that's why I've got my podcast, like I had with Stefan on, we nerd out, but I'm teach people how to become better investors, right? Because if we take care of these things and they spend more of their time and energy becoming better investors, they're going to have better outcomes. Just this, it goes for both sides, right? The deal sponsor, same thing. We take the administrative stuff and chasing after investors, focus more on your craft, and becoming better investors is good for everybody. Now we can invest with confidence. And so we've created an ebook, right, that sort of helps investors. They can download it on verivest.com on the homepage, but just giving them a kind of guide, right? Like, here's the checklist. You're looking at vetting an investment. Here's a checklist. You download it, you fill it out, make sure that you've, sort of the pre-flight checklist. And now you can go and allocate without worrying about it. So for me, it's like TSA pre-check, right? Like, I would never go back. Like, I can't go stand in lines at the airport again. I mean, once I've experienced just like sailing right through, like it was worth the effort, even though I had to like fly to LaGuardia and wait, like this was several years ago, right? Like when it was harder to get the whole thing, but I'm like pain in the ass at the time, but man, I love being TSA pre-check, and I'm sure the rest of you do too. And as I referred to, this is sort of that due diligence guide, just really trying to help investors become better at this process. But of course, from a deal sponsor standpoint, I think that's the flip side of it, right? Is that if this message gets out to the passive investor side and they have these greater demands, it's going to create an issue for deal sponsors, right? Like everyone's going to be forced to sort of up their game. And if you don't, you'll be, maybe on the outside looking in on some deals. So here's my contact info. Obviously happy to answer questions. Looks like people were, hammering questions in there, but that's sort of my presentation. That's sort of the Shakespearean tragedy. What do we got here, Stefan? Questions?
Great. Yeah, thank you, Lance. That was really awesome. So yeah, we have a few questions in the chat actually, and I have a couple of questions myself, but let me start with that. So we have, so we have a question. Well, you went, I think, partly over it, but the question is, how do I do a background check on a sponsor?
Mm-hmm.
So I assume that's something they can, they sort of automatically get through your platform.
Yeah. So what people are doing is a lot of investors are just, they're reaching out, they meet a sponsor, they know about Verivest, they tell them, hey, there's this, this thing called Verivest, reach out to those guys. And it's $288 per principal to run the background check. And you can order it right off of you can go to verivest.com/sponsor. I believe it is, or it's the sponsor link on the thing. And you can, and when I say you, the deal sponsor can do it. So I think from an investor's perspective, if I'm in this guy's shoes, I'm going to say, listen, it's sort of my requirement, right? Like you go to Verivest, you become a member because you're going to do the background check and it's going to show up on your profile, right? If you choose not to do that, like the guy I talked to the other day, he's like, he brought it up to someone and they got all skittish and were unwilling to do it. He's like, well, I know everything I need to know now, because it's not financial, right? $288. It's just sort of this, it shows they kind of show their true colors right away, but that's how it works.
Okay, and what you call the background check, so that's sort of your internally developed background check that you guys have.
We use a third-party firm that runs it, and it's a 7-year background check. And I think someone else was referring to it, but the civil litigation, I think, is one of the big ones, right? Is that a lot of background checks like employment, they don't include civil litigation nationwide. To me, so ours do, but we use a third party to kind of run those. And for us, it really is, and I did kind of gloss over it. You have to pass the background check if you pass the background check, we'll invite you to become a member. And the membership fee right now is very inexpensive. It's $65 a month for a sponsor firm to be a member. And so, but the background check is really the gating factor, right? If you don't pass the background check, we don't invite you to become a member.
So okay, so it has the civil litigation piece to it. So is it criminal record exclusively, or like what does it?
No, criminal, civil, and then it's obviously all the regulatory sanctions, liens.
Mm-hmm.
We don't run a credit report.
Mm-hmm. Yeah, okay, makes sense. Understood. Okay, next question. So any suggestions on how to conduct, background checks once in a while without hiring an expensive firm?
Yeah, so there you got it. We problem solved.
Sure.
Doesn't require an expensive firm.
Sure. So especially how do you find out about any previous lawsuits or litigation? So that's the question we just answered as well. So, okay. Okay, let me see one moment. I have a couple of questions actually, and if you guys feel free to speak up if you wanna ask a question as well. Yeah. So I wanted to ask you, your database of sponsors that have been, background checked that you currently have, how extensive is it at this time? I assume it is, growing over time.
Yeah, that's a great question. Yeah, so I think right now we've got Verivest verified members are in the 70s, with a bunch that are sort of in flight running through the process. Mm-hmm. On the site, we do have, I think it's nearly 1,200 profiles. So our strategy here is a bit like Glassdoor did on the employer side, where we populate the directory with as many sponsors as we can find, right? And those are unclaimed. And it's working, right? So what happens is investors go and use Google to research people. Well, they run into, usually the Verivest profile will be on page 1. They'll click on it and realize that sponsor is not verified. And then they reach out and say, hey, I was interested in you, but you're not, how come you're not Verivest verified? So, and then I think the number that are gold, I'm not sure what number we're at right now, but it's the vast majority of the members end up going gold. And what gold is the part I glossed over, is that one of the key things we do when people become members is we verify how much investor capital they have currently under management. And so that's like, how much capital is at risk in these investment vehicles, equity, and some people issue, notes to their investors or whatever. So we substantiate that. They give us, financials and whatever else we need, capital commitments or whatever to substantiate the number. And then the directory, all the results are ranked by all Verivest verified gold members will rank first, investor capital managed high to low. And then those who are just Verivest verified, which are just the ones who've passed the background checks, but will validate and verify their investor capital managed, and it goes high to low. And then it's just everybody else is sort of alphabetical from there. And then the gold piece is you become a gold member when you engage Verivest to monitor all of the deals that represent the totality of your investor capital managed. So that means that they're submitting their financial statements at minimum to us once a quarter to review and ensure that all the money per the operating agreement is going where it should go, right? And so it's basically like Ponzi scheme insurance for the investors, and we charge a fee. So really, the more capital you have under management, the more you pay to be gold, right? Whereas if you're an emerging manager, you don't have much capital under management, it's less expensive. And we charge $24 per month per million of investor capital managed is that rack rate monitoring fee.
So, okay, so short of like the more extensive like financial statements verifications that you guys do, so before that, like the kind of quicker steps that you have are essentially the background check and investor capital management, right? That people can kind of look for as some, some like preliminary verification, even if they don't have, the extensive.
Yeah, you got it. So I mean, it's like we're at least going to substantiate like, hey, when they tell you that they've got 50 million in investor capital under management, that it's legit. Like we confirmed it. And then of course the track record verification is a separate thing. So you can, people can opt to engage us to verify the track record or not. Obviously investors would rather see that, that it has been verified. And then
verification. So let's say the sponsor has announced in advance they are going to have, 20% IRR or something like that. So and let's say that's a pro forma, etc., and or they have like the subsequent, like the final net IRR. You guys kind of
we will, yeah. So and we won't even we do gross. So if someone says they bought a property for 10 million, they sold it for 15 million, and it was a $5 million equity check, and they said that it was a 23.6 IRR with a 2.24 gross equity multiple, we say, okay, great. For $240, give us the tax returns for the partnership and, banks, whatever. Here's what we're going to need to sort of corroborate that. One, give us a spreadsheet that shows the XIR calc that shows how you arrived at that, which of course is hilarious that most people are like, we lost the spreadsheet. We don't have that, right? And so it's like, okay, well, how did you come up with the number, right? Like it came from someplace. But so that's what we do. We look at what they said, and then we run our own independent calculation. And, we either point out that they calculated it wrong, which is probably half the time. And then we say, here's what we came up with. Right. And then that's what we plug into their track record. But once again, you don't have to engage us to do that, but we can do it. And then I think, to me, the monitoring piece is really the key, because it's, you put money into a deal. It's like just making sure that everything's happening as they said it was. Is sort of, that's how you lose your money. It's after the fact. And ensuring that those assets actually exist is the big piece of it.
Okay, right. So those are like some pretty clear benefits to the investors, but you mentioned to the sponsors themselves, you guys shortened the admin time and the investor prospecting time spent, let's say. So
well, and I'd say increase your close rate too. I mean, you think about it. Here's what I tell everybody: is I say, listen, the vast majority of the world, you're invisible. You don't exist. I said this to Andrew. He didn't like it, but he's a big boy, right? And so it's like Clark County, Washington knows Romano, but Boise, Idaho doesn't know. They don't know Romano. So for us, it's an awareness problem. So to me, I use the baseball analogy, right? Like you're the last guy on the roster, and you basically pinch hit. You get 10 at bats a month, right? And then you get up to bat, and you're basically batting like a $186. Well, of course, you're saying, well, if I had more at bats, I'd probably have a higher batting average. So for me, we got two problems. One, you need more at bats. That's an awareness problem. So let's give you more at bats. And then your other issue is your close rate. So all the bullshit excuses that investors give you as to why they're not going to invest, right? That's them going, you could be like the next Bernie Madoff, so I'm not going to take the risk. So for me, we increase your batting average, right? Or on base percentage, whatever you want to say, because now you can cut through, all of that other stuff. We get you more at bats, and we help you increase your batting average. But you've got to make the bat needs to meet the ball. I can't do that for you, right? Like you got to do that part on your own.
So let's say, just for my understanding, if we take, let's say, the administrative piece for an investment sponsor, right? So they have their administrative overhead going on. So what is the way in which it's getting Verivest verified and being on your network that they would also benefit in reducing their administrative overhead?
Yeah. So for
Management.
us, the admin overhead is the extra services that we provide. So we have an investor management platform, right? That's white labeled. We have resources like investor services reps that can help onboard investors. It's, you know, it's done electronically, that they need their handheld. And then we have bookkeepers and fund accountants, and we've got a tax practice. So that's really that administrative stuff, right? Reduces those, take them off your plate, shift those expenses from the operating company to the deal level, right? Like the fact that you had to hire an extra investor relations or administrative person to, you know, answer those things, like you don't necessarily need that person. Like Verivest, you know, can kind of handle that on a more of a variable expense basis.
Got it. Yeah, that's great. And so another question we have in the chat. Well, I think we touched on it already, but still just to make sure. So does Verivest vet the sponsors past deal performance as well? Does it audit the financial performance? Now, you guys, I assume that's equivalent or comparable to an audit of the financial performance. I assume if you guys are going in and computing the XIRR yourself.
Yeah, I mean, that's auditing the financial performance. That's right. On a gross basis. That's right.
Right. So do your sponsors get involved in opportunity zone investments?
Yeah, we do have some that have OZ funds. You know, not many, but yet, right? I can think of one off the top. I think Saratoga has an OZ fund. I don't know if you guys, Romano, you guys don't have an OZ fund, do you, Andrew? I don't think they do.
So do you guys, let's say in the auditing process, is that sort of the tax, you know, like the tax strategies that they employ? Like, do you have sort of like a CPA, like an auditing their tax CPA in a sense?
Yeah, I mean, we have a team of, you know, a CPA that does partnership tax, right? And so, you know, we're sort of audit light, right? Like we're not auditors, so we don't do audited financials. But to me, you know, they hate that I say this, but I think it's overkill, right? More often than not, having an audited set of financials that are in accordance with GAAP doesn't necessarily mean that people aren't committing fraud, right? And I think those are two different things. So for me, I look at it like, as an investor, what do I care more about? I care more about, like, are the assets on that balance sheet real? Like perfected interests in whatever those things are? And is all the money going where it should be going? Right? Like those are the things that I'm more worried about. I could give a rat's ass if the financials adhered to GAAP standards on revenue recognition or whatever, right? Because it doesn't really, I mean, hey, in the public markets, I care because I want to make sure I'm comparing apples to apples, right? I don't want you like getting all creative, like, you know, Wirecard or some of these other guys or Enron or whatever. Like but in our space, it just seems it's a bit of overkill.
Do you guys have other questions? If you wanna, we have Lance here, so please use the opportunity.
Yeah, have you seen an increase in the number of sponsors over the last couple of years, or is it has the industry generally maintained its level?
No, it's exploding. Like I think it's absolutely exploding, and which is really exciting to see, because I feel like it's kind of like what happened with like startups back in the early 2000s. You know, the capital investment required to, you know, to launch your own, you know, software startup was high. You had to buy servers and you had to buy all the stuff, and, you know, but now you can launch your own startup from a coffee shop with Amazon Web Services. You've got all the computing power in the world at your fingertips, right? And so I think what we're seeing is that, I mean, obviously multifamily syndication, just syndication in general, is just exploding, but I think it's because the barrier to entry is lower. And I think that that's what I'd like to believe, that what Verivest is a part of that. I mean, to the degree that we make it more turnkey and easy and lower the barrier to entry for people to get started, I think you see the exodus of a lot of, especially the acquisition guys, leaving a lot of these sort of monolithic private equity real estate firms, saying like, why am I making that dude a bunch of money when I can go, I'm the one who's finding all the deals. I might as well leave and go start my own little shop, right? And run my own deals, right? Like that's what's happening. And I think that's a good thing.
Sorry, I was on mute. Do you guys sort of audit live deals, or is it only on a kind of historical basis track record for the sponsor?
Yeah, it's just historical. That's a great question, Stefan. Yeah, it's the one thing we don't do. That the reason we're able to do what we're doing is that we don't pass judgment on deals, right? So we're not underwriting deals and saying this is a good deal, that's a bad deal. We don't promote deals. We promote sponsors, deal sponsors. They're the stars of the show. So I'm more about how can we help deal sponsors tell their story, and then I'm more about how can I help investors become better investors, right? Because to me, that, you know, I don't want to get into that, right? Like, I don't want to be, I mean, obviously there's a place for it, like that, but it's not us. We can't do both, because the second that we start passing judgment on deals, we have to curate the whole thing. Now all of a sudden it's exclusive, not inclusive. I want to be inclusive. I had a guy, an investor, email me this morning, or he was basically saying, I can't believe that you've got these tiny sponsors with only $1 million, that you're letting them borrow your authority. And I'm like, you know what, dude? Everyone's got to start someplace, right? Like all the big guys, he's like, well, big guy X and big guy Y, I like those guys, I invest with them. I'm like, well, you know what? I've met plenty of investors who love looking for the diamonds in the rough. You know why? Because the emerging guys are freaking hustlers, and they're going to bust their ass to deliver, and they're usually going to give you a bigger chunk of the upside. So I know investors who are out there looking to find, you know, those emerging guys that are really good at what they do. So, you know, once again, to each his own. It's not my job to tell you, like the quote earlier in my presentation, that the trend should be that everyone should go and pile all the money into the big guys. I just think, whatever. I mean, do that if you want to do that, but I just don't, I don't know. It rubs me wrong.
Yep. So, but do you have, like, as an expert in the field, what is your experience with, let's say, what is your opinion on CrowdStreet and the other crowdfunding platforms in terms of their, you know, their sponsor verification that they do? Because I've heard of people sometimes losing money on those.
Well, yeah, I mean, I think that verifying the track records of people is easy to say, harder to do. And I think that what's happened, and we've experienced that, like it's not easy. It's a lot of back and forth. And I think what you've seen is that some of them have said they've verified things that they actually hadn't. And unfortunately for those particular platforms, it sort of backfired, because it turned out that those were the guys who actually were, had a phony or forged track record. And to your point, Stefan, people lost money in those deals, not because the deal was bad, but because the sponsors stole money and, you know, misappropriated funds. So I have no problem with any of those platforms. I just feel like, to me, they're just an allocator of capital, right? Like they're just one group who has deal guys on staff that can vet deals and pass judgment. At Verivest, I feel like I'm trying to enable, you know, hundreds of those individuals, right? If you're really good at vetting operators and the deals that they have, there's a place for that, right? Like that's a service to, you know, Joe Dentist, who's too busy to do that on his own. And if he comes to like you and trust you and your ability to figure out which deals are good or bad, and, you know, you want to pay him a 50 basis point or 100 basis point management fee and a cut of the upside, go for it. That, to me, and I'd be a hypocrite to say it otherwise.
You would say it's, you know, let's say maybe not their focus so much, really vetting, you know, let's say extensively vetting sponsors. They maybe sort of vet them.
Well, and I'm trying to be diplomatic here, right? Like, so I'm just saying that everybody who claims to be the world's greatest at vetting deals and sponsors, you know, well, there's a curve there. I mean, some I'm sure are, and many aren't. You know what I mean? Like that's the hard part, right? Like, you know, like even with you and I, when you had the conversation, I mean, you've got a very specific way that you look at the world and how you use data. You're very data driven, and, you know, and it's your way. There's other guys who are more feel guys, right? And of course, you know, I think you chuckle at them under your breath, like you're feel guy, and you're just groping and you're riding sort of the rising tide, right? But who am I? That's what I mean. Like, I'm not in the business to judge at that level, right? I mean,
yeah.
So
okay.
for us, that's kind of where we're at. So are some of them good? I'm sure they are. Some of them bad? I'm sure they are.
Yeah. So another question: how much can you rely on the SEC to protect investors? A question on the chat we have.
Well, not much, because, hey, let's face it. I mean, the SEC is underfunded, right? And that's what I mean. Like, this is the thing, is that if you're waiting for someone to protect you, they don't have the budget right? And they don't have the resources to do it entirely. When you look at the whole space that I'm referring to, is that it's actually unregulated. I mean, like it's you just have to let them know that you're selling securities to people. That's basically it. And then what happens is that people get ripped off. I mean, I got a lawsuit sent to me yesterday from someone who's like with a very reputable firm that most of us would have heard of. I mean, and they're being sued for basically running a Ponzi scheme, right? And it's like, and the issue there is that the SEC doesn't find out about that stuff until it's way too late and the damage is already done, right? And so you can't you can't sit around and wait for the SEC to save you. They don't have enough resources to do that.
So even like establishing, let's say like some of their measures for like 506C, I guess, or 506B, like establishing kind of a substantive relationship and whatever, all those terms with your investors, that is sort of like trust building. So you're saying that's not a.
Well, I think it's a good step. I mean, I'm all for it. Yeah. I mean, I don't have a problem with those things. It's just being real about it, right? Is that if we let them do it, then they're going to not let us do it. You understand? Like if they're going to regulate, they're going to take it away. So they're going to be like, here's how we protect you. We don't let you have access to it. There you go. You've been protected. We're done. Right. So it's, I think that's the issue.
Yep. Okay. I see.
I'm a private sector guy. I mean, we're eminently capable in the private sector of solving our own problems. I think most of them.
Yeah, I agree. Yeah, basically, it's sort of the usual government kind of problem, right? It's insufficient resources, et cetera, et cetera. Incentives not fully aligned, and that makes sense. So yeah. So do you guys have any other questions? Actually, if you wanna ask. Yeah, anyone? Or if you can just put it on the chat. We have a couple of minutes. We can, if you don't have any questions, we can, start wrapping up. And
yeah. Thanks for the time. I appreciate it, and all of you. Thank you for taking time out of your schedule to participate in this. And as you can see, I'm super passionate about this topic.
No, that's really great. It's a great perspective you take on the industry, and I think it's a great value add. I think my assumption is pretty much all the mid-range between institutional investing and like private real estate investors is kind of a little bit of the Wild West, I am guessing, short of some SEC regulations, but it's not an overly regulated industry, I'm sure. So
yeah, it's not. Yeah, Wild West is a good way of putting it. It is the Wild West.
Yeah, it's sort of like your earlier discussion. I assume that's part of how private equity goes. It's not so easy to regulate as public markets, but Okay, well, so you shared already how people can reach to you. Do you if you wanna show that again, so basically, or?
Yeah, no, I think we're good. Yeah, if you got any questions, just email me, lance@verivest.com. I think Brittany on my team put up sort of the link tree in the chat so you can get to the podcast. We got 3 episodes a week, and yeah, you can find me, verivest.com. My little chat bubble pops up. So I actually still do, customer support, I guess, as well. So you can actually just chat with me on that.
Yeah, make sure to do that. Thank you so much. Thanks, Lance.
All right, take care. See you guys. Andrew, see ya. Everyone else, see ya.